Hey everyone, welcome to today's Explainer. We are diving right in today to unpack the Q2 2026 earnings data for home bank shares. We're going to extract the real narrative hidden inside all these figures. It's essentially a story about a major catalyst, the immediate consequences of that catalyst, and what it all actually means for the underlying health of the business.
So to do this efficiently, here's our roadmap. First up, the Q2 2026 headline. Second, the Mountain Commerce catalyst. Third, breaking down the revenue. Fourth, the cost of growth. And finally, number 5, the big picture takeaways.
Before we get totally lost in the spreadsheets, I think it's always helpful to ground these financial numbers in physical reality, right? Home bank shares isn't just a bunch of data on a page. It's real brick and mortar locations. It's community presence. It's a growing brand footprint. And in Q2 of 2026, that footprint experienced some serious, record-breaking activity that we are absolutely going to explore today. Okay, Section 1, the Q2 2026 headline. Now, to truly understand this quarter's massive headline numbers, we have to look past standard accounting and focus on what we call non-GAAP financial measures. Basically, the primary business operating results were heavily impacted by the significant one-time costs of buying another company. So we're going to look at how management stripped those out to reveal the actual core performance engine running underneath those one-off events. Seriously, keep this adjustment in mind because it is the master key to understanding this entire explainer. Moving on to Section 2, the Mountain Commerce catalyst. So the defining event of this entire earnings report is right here. During the second quarter of 2026, Home Bank Shares successfully completed its acquisition of Mountain Commerce Bancorp. And listen, this isn't just a minor footnote, okay? It is the ultimate catalyst. It's the engine driving both the soaring revenues we're about to look at and the spiked short-term expenses. This acquisition touches literally every single metric in this quarter's report. All right, Section 3. Breaking down the revenue. So what actually happened to the top line when this catalyst was introduced? Well, a massive $295.1 million happened. This is a company record total net revenue figure for Q2 2026. Because of the Mountain Commerce acquisition and some really strong organic growth, revenue didn't just inch up, it took a massive leap. We're talking a 10.6% jump from the prior quarter. If you look at the historical trend line, it normally hovered right in the 270s and 280s. Then bam, Q2 2026 hits and revenues skyrockets up to that $295.1 million mark. That dramatic visual spike you're seeing, that is directly driven by the recent acquisition. Now let's break down that top-line revenue growth just a bit further into its two main components. First up is net interest income, which totaled a staggering $236.4 million. That's a 5.8% increase, mainly driven by earning assets from the acquisitions and favorable margin performance. But then we have non-interest income. This jumped to $53.5 million. That is an incredibly impressive 24.9% increase from the prior quarter, and that was fueled by higher service charges, fees, favorable fair value adjustments, and again, contributions from Mountain Commerce. Basically, both engines are firing on absolutely all cylinders here. Which brings us to Section 4, the cost of growth. Now, as we all know in business, growth is rarely free. Total expenses did indeed increase during Q2. Interest expense rose to $95.2 million, largely because the bank took on a massive $921.3 million increase in interest-bearing deposits. But the real standout here is the non-interest expense, which jumped up to $135.5 million. Why? Well, because it includes $12.7 million in direct merger-related expenses from buying Mountain Commerce. Honestly, think of it like a major home renovation. Upfront costs might spike your short-term expenses, but it's a strategic investment to expand your footprint and build long-term value. That $12.7 million is essentially the bank's home renovation cost for the quarter. Check out the trend for non-interest expense. It remains incredibly flat and disciplined for 4 straight quarters, hovering right around $114 million. Then suddenly, it shoots up to over $135 million. That sharp rise perfectly proves the short-term impact of those one-time merger costs. The company's standard operating costs didn't suddenly spiral out of control or anything. They just had to pay the bill for major acquisition. And finally, Section 5, the big picture takeaways. Let's look past these short-term costs for a second to see the true underlying performance, which is where those non-GAAP adjustments we talked about truly clarify the picture. Standard GAAP net income for the quarter was $119.3 million. And hey, that's a great number. But when we adjust it by excluding that $12.7 million one-time merger expense and a few other minor items, The adjusted net income reveals the company record $128.1 million. That is an 8.4% increase from the prior quarter. The primary difference between standard and adjusted earnings here is simply the cost of growth. Notice how standard net income and adjusted net income usually track pretty tightly together for a year. But then, in Q2 2026, the adjusted numbers break sharply away and reach incredible new heights. This brilliantly illustrates how strong the core business actually performed when you remove those one-time renovation costs. The core engine is absolutely thriving.
So the most crucial point is really captured in this final metric: pre-tax, pre-provision net revenue, or PPNR. By stripping away taxes, provisions, and those one-time merger expenses, we get the purest look at operating revenue. And thanks to the catalyst of the Mountain Commerce acquisition, that adjusted PPNR surged to a company record $171.2 million. No small feat for sure.
Which leaves us with the ultimate question. We've seen the massive top-line catalyst, and we've analyzed the short-term consequences of the expenses. The numbers clearly show a record-breaking quarter when those one-time costs are removed. But as we look to the future, will the Mountain Commerce acquisition continue to drive this kind of long-term value, seamlessly integrating into HOMB Bancshares' core engine? The data tells a really compelling story of growth today, but only time will reveal the full legacy of this quarter's bold moves. Thank you so much for joining me for this explainer, and as always, keep learning.